guys, and glad to have you on board again today, talking about yesterday's very weird session into US stock indices, therefore as well into the euro area. Quite a, mixed feeling type of day. So we're going to try and covering what has been at play, what the smart money actually did throughout the day. Did they just market make the dumb money, or have they actually been triggering a market reversal, confirming a major H4 timeframe dip? This is the question, very tricky question once again. We can never give a 100% reliable answer, never saying that something can only happen or can never happen. It always has to be something in between, otherwise that is typical dumb money reaction. So let's try to make a smart money reaction out of there. What are they doing and what can they eventually be about to do within the next few days is what we're going to try answering today. First of all, we're going to use context analysis to try feeling the sentiment of the market. What's the current pace? All right, the first thing we have a look at, and we do this in a regular basis. Remember that in terms of strategical risk management, you need to use the same tools over and over again. It's not picking the things you want. Remember that if you do this, means you're into confirmation biases, which is generally one of the very best friend of the uncertainty and fear of uncertainty biases, which is basically being confronted to a chaotic system. And as you try to make any sense out of it, which is totally impossible, chaos is just chaos, all right? You're basically going to feel your guts, which means generally in less than 10 seconds, you're gonna know what your subconscious level feels about this market, whether you like, don't like, whether you want to follow or fight against. And in that perspective, you already have a choice that has been made just subconsciously. And as there is a huge contradiction into your brain, what you're going to be doing is you're going to try filling these tensions by making them rational. But if you are in the fear of uncertainty biases, what you're going to be doing is you're going to try gathering whatever makes this feeling you have rational, which means instead of looking at the same stuff over and over again, to make sure that what you feel is rational, you're going to look for rational stuff to come confirming your sentiment, which is definitely not what I do. You need to use the same tools over and over again. Otherwise, this is not risk management. This is just fulfilling your fear and uncertainty biases. So yeah, we're using the same tools over and over again. This one is new, of course, but this is something I've always used, okay? This is the private investors sentiment, retail traders, okay? So this is contrarian volume analysis that we can make out of this. Even though I'm going to make a podcast out of this one to teach you how these things actually works. Anyway, to make it real simple in here, the things we care about is this pattern. When you see the two lines in here making this, when you see the prices going into early possible trending, that means that people are going against it. Okay, which means bears have increased their positions, bulls have, this is the numbers of traders. So there are more bearish traders and less bullish traders. So the gap in between is increasing as prices are moving up, which means retail traders are doing the opposite of what the market's doing. Generally a sign that if it keeps on going this way, a trend might be emerging just because of people fueling this. The more retail traders will tend to fight against this, the more it will fuel the trend. So I would say currently, the levels are not yet enough to consider this thing as a durable, but if it were keeping that thing and keeping that pace over the next few days, I would say eventually we could consider that the bullish trend might be re-emerging just because of the dumb money making the opposite stuff. But that is not what makes the market all about itself. This cannot explain the market, just like this cannot, just like every other stuff cannot. So you can't just trade because of this. This just said that as long as the bears, as long as the retails are getting more and more bearish, they're just fueling prices increase inside the range until we actually get so far in the range that we get a break out of it, okay? Which is a totally different topic, but we'll see about later on. This is smart money risk limitations, and 50, oh man, if you think the smart money has a strong confidence in the bull side right now, Jesus motherfucker, you're wrong. So 50% means we barely dipped a toe into some negative territory. And like I said, regarding the current context, I think that the buying area is pretty much in here, 30 rather than being 50. Buying at 50 would be the most bullish the most bullish feeling we've had. But that also depends on what the dumb money is going to be doing. Anyway, going further, yesterday's session, big gap. All the rest of the day has been basically neutralized all day long, just despite the NASDAQ, once again, still the same old shit. But look at the volumes. I mean, the volumes are definitely lower than the average, which is not a good sign. Means everything that has happened yesterday has been done with futures contracts. We've been gapping up, still holding those gaps, which is bullish, but that needs confirmation today. If today isn't bullish, then yesterday was just a random gap into a range. And that would just confirm that there are more downside to come. Anyway, we'll feel about that later on. Derivative assets, some going bullish, some going bearish. As you can see, Nikkei is going bullish because yen is going down. They're just trying to sell any correlated assets of risk. Yen is being one of them. And so far, yen is mostly sold. How far can we go with this thing? Is the yen about to surge immediately because the bearish trend reactivates? All those things are possible, of course. But so far, the Nikkei is profiting from this, where other assets pointing down, Nikkei is pointing up. But the Nikkei is daily squeezing. Remember that all of those breakouts you see in here could just be fake. Okay, so we're going to see and have a look at that into the technical analysis part of this perspective. Okay, so first thing first, let's try to make any sense of what happened yesterday to figure out what's going to be at play today, or what are the most probable scenarios. So if we have a look at the 15-minute chart time frame yesterday, this is where the trick actually gone at play. So what the hell is this? Is this a trend? Is this a whatever? We need to figure out that by contextualizing stuff. When you see moving averages going down this way, and you see this, that looks like a bullish trend. This doesn't work out that way. You don't go from bearish to bullish. You always have to range a bit. So we've ranged but made new lows. So where's the fucking range that reversed? Where is the higher low point that can allow this thing to happen? So that doesn't fit the plan. In order to go bullish, we needed to range and we didn't. So something goes wrong. So we need to study this thing. What goes on? We can clearly see the breakout. We can see the candle closing on top of the context and the trend channel. So what the fuck is wrong with that? Okay, and then we see tiny 40-degree angle trend channels. Very, very limited price risk management. Oh, the momentum is stood below zero. Oh, that starts ringing some bells. That rings the washing machine pattern bell, in which, of course, there is absolutely no risk management at all. This is pure market making, sentiment-driven market, definitely fueled by stupid retail traders getting to sell a market that is rising, and they're just fueling some more price increase. What is doing the smart money in between? They're seeing the guys selling because they have access to definite order books. They know where the stop losses are. They basically say, all right, they're selling in here. The stop losses are in there. Let's just get there and we'll buy the shit and then sell it where they'll buy it out. Remember that someone who sells puts a stop loss. A stop loss is a buying order. So what the smart money is going to be doing is the exact opposite. They're going to fuel the market to the upside. Okay, credit is free. They can borrow just as money as they want. And you, retail traders, have very tiny, limited amounts of money to execute. So it doesn't cost that much to just fuck you up. So this is exactly what has been displayed yesterday. Okay, these washing machines tend to contract momentum to some huge limitation level in which the trend channel gets so narrow that they get even shorter than the context ribbons. And in that perspective, you got a squeezing pattern. So you got price squeezing pattern, momentum squeezing pattern, and what happens out there? The market is totally lost. Is the market bullish or bearish? It's just absolutely neutral. What happened yesterday isn't bullish. Low volume, market making, absolutely squeezing prices, which means out of these squeeze and out of these washing machine patterns, we can have the exact same opposite stuff. 45-degree angle to the downside and just invalidating whatever has been done yesterday. So 15 minutes, is this a reliable time frame to trade on? I would say goddamn no. So is the 15-minute chart time frame a huge supportive area? Could be, if this really is a trend. So today, all that matters is how do we trade with these areas? Of course, this thing goes bullish. So as time passes by, these things increases. Okay. So what matters today is how do we deal with that? If we manage to build a support out of this and make new highs, then definitely there is a trend. Okay. second option, this thing doesn't work out. Like I said, we go in here, people try to trend follow, but there is no trend, which means we're just going to do the exact same thing to the opposite direction. People buying in here and putting some stop losses out there, and we're just going to go way to the stop losses in a straight line 45-degree angle. Absolutely no risk management, but just market making on the opposite direction. And in that perspective, any bullish momentum will be sold, just like it did on yesterday's opposite direction. In that perspective, just an absolutely stupid market ahead. So I would eventually consider those who have a bullish bias to eventually work out this area as a support, but be aware that you can be just fucked as the bears have been yesterday. Yesterday was our turn. Maybe that's the bulls' turns today. I just goddamn don't know, but I won't be buying harshly today. Just like I wasn't buying hard yesterday either. So I don't think they would have huge trending behavior right now. Just like I said, the smart money isn't doing this, so neither should you. So don't make strong bets on either to the upside or to the downside. It really feels like the market can be wrong-footed at any time, okay? But anyway, when those patterns happen, the first things you need to be aware of is that when the market squeezes the 15-minute time frame charts, means you need to zoom the fuck out to higher time frames. And what happens in the H1 time frame is interesting there. First of all, absolutely no breakout out there. As you can see, the major trending cycle is just a big oscillation. We do have some short-term breakout patterns in here. So how do we deal with that? Do we surge to the upside? No, we just oscillate across. So that is not a bearish sign either, but what that says is that if we want to reverse out there and go bearish, then we just fucking can. Does the market has some reversal opportunities out there with the negative moving average? Yes, definitely there is. So just have been hugely overbought, we can now hugely oversell this market, and that would just be absolutely driving people crazy. So I would say today, those who buy take the exact same amount of risks than those who sold yesterday. Okay? What matters to me is which time frame is the reference. Do we take H1 time frame as a reference, in which if we're in a range, then this is very likely an intermediate topping area. Are we going to rebalance in here is my first question mark. If we don't, then we're immediately going to go right to the context in here and probably below, which means we're going to fuck instantly all the stop losses of those who bought, meaning if they put their stop losses in here, we're going to go there. If they put it out there, we're going to go there. We're just going to go for the stop losses. Okay? If we go for the bull stop losses today, that means a triangle is very likely down the road, which means yes, we have broken this trend line, but no, we didn't made anything bullish. We're just going to set ourselves to wait for early October before either confirming and getting to the upside or invalidating and retracing back into the previous ranging context. What is going to happen out there, I don't know. The only thing I know is that the bearish pace was too bearish. We have been too much bearish, anticipating breakdowns in here. The timing was not appropriate, but I don't think the overall scenario is wrong. I just think, yeah, wrong timing. Therefore, the bulls are trying to put a very solid score out there, but I think it's too much bullish into a point that people might think this is a trend and therefore creating the opposite reverse. So I don't know. All I know is that this is a tough area to trade. This is a volatility strategy management out there. So experienced context that I'm dealing only with the experienced traders. I'm selling today again, but very, very cautiously, and I'm rapidly securing the trades, willing to figure out if we're going to reach out to those areas, and if so, do we break them down? That's the only thing I'm concerned about today, to try giving myself another answer. Are we ranging or are we retracing to create a higher time frame range? I see two definitely interesting areas. The first one is being in here. That's really the neutral bearish stance, in which people thought we were going bullish, we actually don't, and we fuck the bulls. Option number two, this is not the case. We're just neutral, and we're going to range out there in some kind of triangle, waiting for October to switch on, and we'll see. Either we rapidly increase to test the bears' resilience out of these areas, which will be traversed by the bearish volatility boundary, which is going to be another experienced trade. But otherwise, this would be a possible third range boundary for less experienced traders to deal with, but most appropriately in the 4-hour context. So I can see a cluster building itself out there. The question is the smart money going lateral out there, waiting for us to get out there, and they're just accumulating as much bears as possible to fuck them all up. Or they patiently wait out there, or they're already bearish and they're waiting for people to buy below resistances so they can fuck them up and break later on. I still believe that this is the next interesting prices for smart money, breaking this support to get to some more attractive prices to the downside. But until then, all I can see is that we tried and failed this level the last time, so consolidation in the meantime. So don't be too much bearish right now. Yesterday was just one of those examples in which if you try to fight against the market, you're just fueling more upside potential. Okay, so I don't really know what matters now. Is this the neutral bearish stance that we have in here, or are we really going to go neutral, in which we have to retrace furthermore to the upside to get some more attractive prices? The thing is that the previous trends weren't trends, they were market excesses. Therefore, I totally don't think that this mature H1 range is a trend following opportunity. We barely retraced 23% on the higher time frame. It feels way too fast for a bullish trend to reactivate. So the only thing I believe we are doing is just trapping the bulls into something that is very likely going to be building some bullish momentum before breaking this one down later on prior to the election. Just once again, zoom a bit and you'll see, zoom out a bit and you'll figure out that this is the election timing. If we have to go there until the election, Jesus fuck, we do have plenty of time to do it, okay? So it is not an appropriate time to be extremely bearish because the market is rebouncing too fast, whatever. We do have plenty of time, so calm the fuck down. The only thing I'm trying to figure out right now is where are we going to close in 18 minutes? Are we going to validate this reverse pattern? Because if we do, I think we're going to have to pull back to this moving average once again, building probably some kind of a triangle, and if that's the case, then we just lateralize before accelerating to the downside later on. Okay, we're just going to build a less steeper trend channel. Okay, the goal is to get down there before the election, and yeah, if we want to retrace higher, then we're going to get a less steeper trend channel, whatever. Okay, I just don't know. I don't think we're going to go that high. I definitely don't believe. But I don't know. Eventually ABC, and we're going to sell 34.40, something like that. I don't know. All I can tell is that, man, this is neutral. And the smart money is doing some arbitrage stuff. So should you. All right, conclusion. All right, so from what I can tell, it's all about arbitraging in the smart money right now. They're gambling in the NASDAQ to Dow Jones stuff. They're gambling with the Nikkei right now, trying to figure out if they want to push it higher. But we can see that today, man, it's not working out. The breakouts might be failing. We're squeezing the daily patterns. We do have some signals showing that, man, this is not open doors. This is definitely not feeling bullish at all. It just feels like the bears have gone too far. The bears have tried to break supports and they've sold the supports, which has caused some reverse. So that's definitely what I think is at play right now. Wrong footing structures. The bears have gone too bear, so we're going bullish on the opposite direction. Huge and classical wrong footing pattern. The bears sold too much, which just fucked them all up. And as the prices increase, they keep selling and selling and selling, which makes the things automatically fueled into a very low, tiny trend channel, 45-degree angle, stupid stuff, which in the same time doesn't flush down volatility. You can see the VIX is insurging to the downside. It still remains smart money hedging the positions everywhere else. So yeah, there's no trend to emerge out of this. I doubt it, but I just can't tell for sure. So tiny position sizing on the clusters I can identify. I know the current clusters we're dealing with are experienced stuff, which means if you're a beginner, I don't want you guys on there. It requires huge psychological management to make sure that you're not under fear of uncertainty biases, but more importantly, impatience biases, which many of you guys are into. You want these things to go down, and you want them to go down now, and that is a huge problem. That's the reason why you're not patient enough. You're triggering more aggressive trades because of impatience biases, and that's the worst possible case scenario. By doing this, you're actually fueling the market to the upside. So you're just the architect of your own failure. In that perspective, just let the smart money do its job. We're looking for a range top in here. Just let us do it. Just step the fuck aside. If too much dumb money is jumping in, we're just causing the thing to go up. So yes, by actually telling you what I do and somehow inciting you to do the same, you're just fueling my personal invalidation. So Jesus fuck, stay away. Let the professionals handle these areas. And in the meantime, just go elsewhere, all right? I don't know, short-term trading if you want to, but this feels very excessive as well. So I don't know. I'm trying to see some stuff I can bring you guys into, but I can't. So I don't know, go stock pick, go elsewhere, or just take a few days off, but just don't trade the markets until tomorrow evening. We're going to switch months and we're dealing with some really, really tough stuff out there. The smart money is doing anything they can to just try risk managing this context, which is fairly complicated. And they're putting some very weird edges in place. So it's hard to figure out which specific asset is going to be doing. If you understood the process, a hedge is buying something and selling something to just make sure that even if those things were moving, you don't take too much either gains or losses, which means they take freakingly complex hedges. They're going to hedge the Nikkei versus whatever other indices, or this sector with this sector. And this thing causes buying and selling entries everywhere else, which means this creates even more complex ranging structures. So if you're trying to gamble on wherever this thing is going to go, and let me be clear, no one knows, and the smart money clearly doesn't know. When they hedge trade and when they stupid wrong foot the dumb money, they just don't know where to go. So if the smart money doesn't know, how could you? That's the simple thing. That's the simplest way to put it into words, okay? So just stay the fuck away. When things are complicated, just be smart enough to understand that this is just higher level of risk management that is required. Until then, I'll let you know when things return back to normal. Does that mean you have to go bullish? Don't get me wrong. Being wrong-footed as bears because we've gone too aggressive on supportive areas doesn't mean the market is bullish. It just means the market had an inappropriate timing, and we just need to find a new one. That's simple as that. In order to get these new appropriate timing, I need to find early risk management levels. Possibly today, possibly tomorrow. Until then, anything you do just fucks it all up for me. It makes it even more complicated because you're opening opportunities for the smart money to go against you. Okay? So yeah, the more retail traders go against something, the more the smart money is going to do against them, just overfueling this market, so on. Okay, so today I'm pretty curious to see what's going to happen, but I'm not making serious bets on the market. I don't think this is where the game is at play. Until then, see you guys later on. Be cool, be smart, and most importantly, just don't be dumb. And I think that anything you could do right now is probably going to go against you. So it's not you trying to make things rational. It's most likely the only rational outcome you could get is, this is too complicated for me. I'm going to get the fuck out of here. Okay? That being said, wish you guys a pleasant day. I'll let you know anytime I've got something for you. Until then, patience.